4 weeks to the June the 26th versus a 5-year average is still up 40%. So demand still high. Flow of new supply 4 weeks to the 26th of June as well versus the 5-year average is still plus 4%, which means it's going. So really, rate of monthly house price growth falls to the lowest rate since December 2019, and the average values just up 0.1% in May. Now, we'll talk about Fife individually in a minute, but average house prices are up 8.4% on year, taking the average price to 250,550. Now, that's Zoopla's figure. Now, I know that the UK average house price is, according to the Land Registry and Statistics, is 281,161. In Scotland, it's 187,954, and in Fife, it's 164,871, which means the average earnings on average throughout Scotland, the UK and Fife itself is round about 30,000. We're all about the same in terms of average earnings. So we've got the same buying power as what somebody in London has as well, which is bizarre. Because London is obviously clearly more expensive, so it makes it more affordable to live where we are. So if we take the multiplier, which is the average price divided by the average salary for each area, in the UK it's 9 times the salary, in Scotland it's 6 times your salary, in Fife itself it's 5.5 times your salary. Now, that is nowhere near what it was in the credit crunch in terms of price point and average salary. So the multiplier has still got a wee bit to go yet. It still comes down to the fact that it's more affordable to live in Fife than any other place almost in the whole of Scotland, if not the UK. We are a really good proposition for people wanting to work remotely and actually not needing to go into work anymore. Why would you want to live anywhere else? I always say, welcome to God's country. Fife is literally that place. If you're anywhere outside of Fife, I defy you to tell me something different, and you visit here and I'll show you what Fife is really like. Okay, let's look at some numbers and let's look at some charts and talk about some information. So here, this is demand versus supply, as we'd said. The number of sales agreed. We'll just quickly go through this and what this means. 40% demand still up. Number of sales agreed is 14% up, and new supply and flow is 4% up. Stock of homes for sale versus the, see it is in the bottom corner, see that there in the bottom corner, right hand corner, and just in a wee bit grey, percentage change. So the week beginning, the week to 26th of June versus the 5-year average, the number of stock, in other words, the number of homes on the market compared to the 5-year average is still 33% less overall. What does this mean for us? Well, average house price growth. Let's talk about that just now. Average house prices were broadly unchanged in May, rising by just 0.1% overall, but in Fife itself, a wee bit more. This is the lowest rate of monthly price growth since 2019. This is what Zoopla is saying. Growth on a quarterly basis is 1.4%. It's the slowest rate in 15 months. Again, this is what Zoopla is saying. Remember, they're trying to get headlines here by talking about all the negative aspects, the fact that it's the slowest since 2019, but if we compare it against 2007, it's probably a lot better. It's significantly better. And the total average prices are up 8.4%. We used to wish that house prices actually went up 2 or 3% a year. And now we're almost saying that, 8.4%, that's no really, that's average. That's absolutely spectacular in terms of a year-on-year growth. And they're now beginning to say it's down from the 9.2% in April. But, you know, you're going to have some leveling out. It will go up and it will come to that point. But year-on-year, if you compare it against the previous year, it clearly is going to go down unless it significantly keeps going up and up and up. But as I say, house prices in Fife are still really quite resilient, and we're still actually quite a low price point compared to everywhere else in the UK and Scotland as well. Wales registered, actually, incidentally, Wales registered the highest price growth, up 11.4% year on year, and average values in Principality have risen by the average by 32,000. Now, average prices in Fife, and here's average house prices in Fife in the last 2 years. In the last 2 years, the average house price in Fife has gone up 23.1%. In the last year, it's gone up 13.2%. So 23.1%, that's a fifth. House prices in the last 2 years in Fife on average have gone up 23%. That's an amazing figure. That's a huge figure. And for people that invest in property, happy days. For people that are actually looking to move on, obviously it gets a bit more difficult as the higher price point you're trying to move to gets a wee bit more out of reach, because the proportional amount in terms of value is a lot more in consideration to what it was before. If you're downsizing, happy days, because you'll be releasing a lot more equity proportionally in terms of that, and actually buying a property at a lower value, which proportionally in terms of house price increase was a lot less than what yours was, because yours was a bigger property, if that makes sense. So let me put that into perspective. 23% in average house price actually represented just under £31,000 of an increase. The 13.2% actually in house price terms in the last year, the increase represented round about a £19,000 increase. So if your house should have gone up about 19,000 if you're on the average price in the last 2 years, which is now, it'll be around about the 165,000 price point. Hopefully that'll make sense. If it doesn't, please feel free to message me or make something in the comments. I'd be more than happy to explain. This is actually quite a good barometer as well, London. So in another continuation of recent trends, London registered the slowest house price growth in May. London tends to be a reflection of what's going to happen, probably in the next couple of months. So a slowdown, yeah, okay, slow down, leveling out, not crash. May, with average prices still in London up 3.9% on the year, taking average home value to almost by 30,000 over the last 24 months in London to £516,000 to buy a house. Just put that in perspective. Average price point in London, 516,000. Average price point in Fife, 165,000. Wow. What could you buy in Fife for the average price in London of £516,000? Possibly an amazing property. That's why more and more people are looking towards Fife as a proposition to live and stay and have their family grow up. Better lifestyle, better choice, better quality, better area, better atmosphere. There's still a broad range of price growth in the capital homes, and Barking, Dagenham registered average prices of 7.2% and over. Let's look at quickly another graph here, and that will show you in perspective where it is. So this is how they see it. And the UK average house prices as the thick purple line. You can see, and then average prices in Wales, and then average prices in the faded one, which is London. So you can see London's coming down now, percentage-wise increase. The average in the UK is up, and average Wales is up. And you would see the UK in the middle anyway, because it'd be the middle of the highest and the lowest. So that's understandable. But they all seem to take the same trend. London seems to take a wee bit more of a harder dip. So London tends to take that. But then that's possibly a lot to do with people overseas, possibly in countries which we are not allowed to talk about just now, in the eastern area, upper eastern area, which are possibly sanctioned. And they cannot buy just now in this area. One of the UK's largest cities, Nottingham, has the largest house price growth at 10%. Average prices in there is 190,000. Aberdeen house prices, which are closely aligned with the North Sea energy industry, are down 2% year on year. Taking the average value in Aberdeen to 140,000. Aberdeen used to be a prosperous, booming industry until the oil industry started to have a realignment in terms of where it was, and that's what affected that values. Average values in the city have fallen by around 6,400 in the last 24 months in Aberdeen. Renewables, remember, in Aberdeen might be a possible area for next for investment purposes. That could be a really good one to look at for investment purposes. Aberdeen, I know there's a lot of investors looking at Aberdeen right now, getting them at really good price points and actually renting them back out at really good returns. But then you have to do your due diligence and your homework in terms of that area. So what will happen to house prices next? There are several factors signalling that impetus in the market seen over the last 2 years is starting to ease. Buyer demand is definitely one of them. So it can be seen, so we'll just jump onto the other chart here. It can be seen here from this chart here that the level of buyer demand in the market, while it's still high compared to the 5-year average, itself, it's still it's beginning to recede to the more normal levels. So normal levels. So you can see that there, buyer demand. 2022 is the pink line at the top. See, the buyer demand was hugely up, and then it's coming to level off a bit, and it's coming in line with 2021, Now, remember, 2021 was still even a boom year for buyer demand. In 2020, it went hugely up, and that was still another good year for buyer demand. And prices were still really resilient at that point in time. And prices were really still resilient in 2019. So look at the 2019 right at the very bottom here. And that was still resilient for buyer demand. So when you look at it overall, even if we got back to 2019, we still have fantastic buyer demand. It would still be there. So no sign of any property crash by what everybody says. I actually heard this morning, or maybe a couple of days ago, somebody saying that, look at the facts. And, don't disregard what other people tell you. Look at the facts and look at what the statistics tell you and what everything else tells you, and then make your decision based on that. And based on this, I kind of think there's still a long way to go. And the market will be still quite resilient as a result. So buyer demand levels, as the pressure on supply from buyer demand starts to ease, it will put a brake on the intense upward pressure on pricing itself. So time to sell, possibly. Let's talk about that as well, time to sell. Another signal that the market is coming from speed at which the home sales are proceeding. The average time to sell, that's listing to sale agreed, is rising up from 22 days in May to 22 days in May from 20 days in March. Average time to sell in Fife is possibly round about, I would say, the 5-week level, up from the 4-week level in terms of there. The fastest moving market is in the southwest, on average, which took 19 days. Homes in London are still staying on the market, the longest, with 35 days from listing to the sale agreed, although the reduction in the 5-year average of the 50 days. So it used to take 5-year average was 50 days in there, and it's down to 35, and they're saying that's slowing down, and yet the 5-year average is still 50. So we're nowhere near what the 5-year average is overall right throughout the country. So that still tells us a number of key indicators. The average time taking to search for a home from a home to exchange, at which point the buyers can move in, is averaging now around about 170 days. So that's 170 days. That's just under 6 months from the time actually looking to search for your home to buying a home. It's taking about 6 months to get it over the line. So if you start now, you could be in by Christmas, genuinely. And that's no joke. It will possibly take that long. Some people actually might not even be in by Christmas if that's the case, because the more time it's taking is usually to the conveyancing process. It has to take place as a result of that. So in the surveying process and signalling that those that want to move this year need to consider in their search and their home sale right now if you're wanting to move this year. So you need to do something right now. You can't sit on the fence. No point in waiting until August. You'll get over the line by August, but you might actually not even complete before Christmas. So you need to actually think about doing this right now. Mortgage rates are another strong indicator. Mortgage rates are rising. The cost of money increases, driven by the Bank of England's base rate increases. Now, while tracker mortgages and tend to move in line with the base rate, lenders have more control about how they price their fixed rate loans as well, based on how much funding they have pre-secured at certain rates from the money market and how competitive they want to be in the market. So the rise in the cost of fixed rate mortgages is less linear in comparison. So it's not the same as it is in terms of the tracker mortgages. Even so, buyers are now facing average rates of 3.37% over a 5-year fixed rate loan, according to Money Facts, compared to 2.64% in December. This increases an annual cost of a loan from an average home price, which is around about the 250,000 point, with a deposit at 25% and a 25-year term by £870 a year. So that's kind of where we are just now. If the interest rate rise can continue, the cost of paying a mortgage will also climb. But about 90 to 95% of people have actually been wise enough and smart enough to actually put themselves on fixed rate mortgages. So that impact won't be heavily seen like what happened in the pre-credit crunch, which was round about only about 60% of people put them on themselves on fixed rate mortgages. So about 40% saw that impact straight away, whereas that won't be seen right now. So further things to come and easing and smoothing out the whole process, plus the stress testing it was involved as well, as a significant impact on what would happen next. So we've learned a lot of lessons from 2008 to 2009 in terms of where we are, and we've we've capitalised on that as a result. Stress testing rules in the mortgages introduced since the global financial crisis, this is what I'm talking about, means that many existing homeowners have proved that their income can withstand rising interest rates. This signals a limited number of forced sales. So forced sales are limited. That's the repossessions, very, very rare. We've not actually really seen anything coming through. And in credit crunch times, we saw a lot coming through. We've not even had any indicators from the asset management companies that we deal with to say that there could be pipeline coming through in the next year or two, because they usually know well in advance by the indicators that are telling them that. So that's happy days as well, and good for the stability of the economy and the local businesses as well, and the local economy in Fife. The recent announcement, the stress testing rules will be adjusted for borrowers, so they no longer have to prove they can afford repayments at the standard variable rate at plus 3%, will mean that some additional borrowers, especially first-time buyers, will be able to access loans, but will not make a significant change to lending levels. The general rule of lending to be limited still to 4.5 times your income will remain. Now, remember, when it was us, it used to be 3 times your income, 3.5. Now it's 4.5 times your income remains. The majority of homeowners are also locked into fixed rate mortgages, meaning that they're protected from current interest rate moves. This is also buoyed by a buoyant employment market. There's 1.1 million people chasing 1.3 million jobs, helping offset the more challenging inflation environment, which is right now. So let's look at the outlook. The outlook factors outlined in the report we're looking at, and we'll look at another graph here. So the outlook, here we go. Outlook here. Let's talk about this. The factors outlining in this report has signalled the rate of house price growth will slow with the rest of the year, but are not anticipated. We're not anticipating price declines. We'll say that again. We're not anticipating price decline. So we're not anticipating negative growth. We're just saying it will ease off. So annual house prices appreciating set to moderate. So here we are right here. The annual house price growth remains strong by any measure. The levels of annual house price growth seen over the last couple of months are the highest since late 2007. They are signalling now, however, that the impetus of the market is beginning to ease, although it will take some time to reflect the annual rates of house price growth to come through, which are more reflected in sales being agreed several months earlier through the process. Even so, the expected house price growth is starting to fall back, reflecting prices, buyer demand, and normalised levels of record peaks. Well, right now in the pipeline, what we've got, we're in the Leadmouth area. We're probably sitting round about the 8% more than home report value. In the East Nuke and the St Andrews and the Cooper area, we're possibly sitting at round about still expected levels, about 10 to 12% over the home report value are being accepted. So that gives you a real good strong indication about where house prices are in Fife right now and what you're expected to pay and where they'll still go. I still believe house prices in Fife will be a lot more higher in terms of the price point as opposed to the rest of the UK, if not Scotland as well, in the coming year. Even so, we expect house price growth, this is what Zoopla says, to fall back. That's because of UK purposes they're looking at, and reflecting the fact that buyer demand will start to normalise from record peaks, although it's critical to highlight that demand levels are still more than 30% higher than the 5-year average. Here we go here. This is what they're predicting. And here, house price increases 1.8% in 2019. Overall in the UK, 4.5%, 8.4% in December 2021. And Zoopla is forecasting round about 3%. I think probably 4 to 6% in the Fife area. Market is still moving very quickly. And by the time between listing and home sale and agreeing the sale is starting to creep up, as a result, another signal that the market is moving back towards a normal condition. So that timeline between, when you're coming, when you're actually looking for a house to make a commitment to buy a house, when the house goes on the market, it's taking a bit longer to actually happen. Hence signaling we're moving more back to normal conditions. What is normal, really? It's just a perspective and what people think. I mean, normal 3 or 4 years ago was 2% increase. Now normal to us is like, oh, can we get 5? That's what people think, and yet that's more than 2.5 times what it was 3 or 4 years ago. The economic outlook on multiple base rate rises will act as a drag on sentiment and activity as we move through the rest of the year. But activity levels so far this year will indicate transactions of around about 1.2 million houses sold across the UK itself. But Zoopla, and what they're saying is they do expect house price growth to ease on a monthly basis, and growth has already moderate and continued with the trend in monthly declines, which will mean annual price growth in the UK, remember this is the UK and not the region, will be round about, as I said, that forecast of the 3% they reckon. Let's look at a couple of charts just to finish off here, right through the UK, and you'll see yourself. This is the UK one. I'll just quickly pop that up and see if I can zoom in and zoom out on that in terms of where we are. Numbers, here we go. So you can see that by UK. You can see all the house price growth there. You've got all the rest of the different areas. The highest one here is Nottingham. We'll just zoom in on that. The highest one is Nottingham at 10.4% over the year. Birmingham, Bournemouth, Manchester, all the way going down. Glasgow's at 5.8, Edinburgh's at 4.3, Aberdeen -2. Overall, the UK average is 8.4%. So that gives you a strong indicator about what's happening. So we're still going up all the way out throughout the UK. In terms of prices, throughout the UK, our average price points, you can see there as well, the average prices in comparison. And you can see there, Edinburgh, Glasgow, 138,600, Edinburgh, 255,000, Aberdeen, 140,000. So again, it's all normalised in terms of where we are, what we're doing. Hopefully that's given you a quick insight into what's actually happening in the whole UK market, as opposed to what's happening in Fife itself, with the average prices, as I said, in Fife. I'll just recap average prices in Fife, just to finish off. The average price in Fife for a property is 164,871, which is average salaries around about 30,000, so it's 5.5 times multiplier. Usually 7 or 8 times is when you think it'll start to stabilise. So we've still got a lot of growth to go yet in Fife. In the last 2 years, Fife house prices have gone up 23%. That represents around about a 31,000 increase in terms of the average price in Fife. In the last year, they've gone up 13.2%, which is around about a 19,000 increase in prices as well in Fife as well. And that's it, guys. And until next month, we'll cover that house price increase as well. We'll be interested to see the UK statistics and Scottish statistics in terms of the land registry will come out soon, as opposed to Zoopla's, and we'll see where they stand as well. And until next time, guys, I'm Jim Parker for Fife Properties TV.